All right, dear students, today we are going to do a question on the final accounts. When we say final account, that means when you're preparing the single entity financial statements. So this is your past paper and it is June 2023 financial accounting exam. So let's go to the requirement first. And in the requirement, we have 20-mark question, which is again a very important question. So prepare MAC PLC's statement of the profit or loss for the year ended 31st December in accordance with IS1. So we know that the format of the IS1 we have already discussed in the formats video of the financial statement. For 6 marks, you have to prepare it. Then MAC PLC's statement of changes in equity for the year ended 31st December in accordance with IS1. So we already know the statement of changes in equity as well from the introductory video of the final accounts. And then we have prepared the statement of the financial position. So for 6 marks, 12, and then 8 marks, 20-mark question in which we are supposed to prepare the financial statements. We'll make the financial statements, but before that, let's read the question first. So whenever we have this final account question or the single entity financial statement question, we are being given a trial balance. So from the trial balance, we have two sides, the debit and the credit side. Now let's see the balances we have within the trial balance. We have the share capital balance, and see this is the balance. 60,000 is the balance, like the 000 in common, but we have 60,000. Basically it's 60 million, but we have taken 30 in common. So let's read it at 60,000. So 60,000 is the balance, right? K 60,000 is the balance, and the par value of one share is actually 0.5. Now, obviously, we know that 60,000 is a balance. We have to calculate the number of shares. The number of shares is simply 60,000 divided by its par value, which is 0.5. So you get the number of shares, which is 1,20,000. So 60,000 is the balance. Divide by 0.5, which is the par value of the share. You get 1,20,000. So you can also do it by 60,000 multiplied by 2. So you get 1,20,000. So you can do it either way. Now, why we are doing that, we'll get to know in a while. So then we have a share premium balance of 2,400. We have sales revenue of 3,100. And if there are any sales return, we deduct that sales return from the sales revenue balance. We don't have the cost of sales, but we have the breakdown of the cost of sales. See, we have the purchases figure. In the property, plant, and equipment, we have the machinery, motor vehicles at cost, and then we have the accumulated depreciation of the machinery and the motor vehicles. So obviously, we know that in order to take these figures into the financial statement, the statement of financial position, we take cost minus its accumulated depreciation. And then obviously the charge for the year as well. Then we have the 20% bank loan, which is 10,000, the liability within the non-current liability, administrative expenses of 2,000. So usually we do the depreciation adjustment in that, distribution cost of 3,200, debenture interest paid of 2,000, and then the carriage inward, which is going to be added into the purchase figure. We know that from the inventory lecture that the carriage inwards are being added within the purchases figure. Then we have the inventory at 1st January 2021, which simply means that we are supposed to prepare the financial statement for 31st December 2021. So it's the opening inventory. So now we have the opening inventory, we have purchases, we have the carriage inwards, and then we need the closing inventory in order to calculate the cost of sales. So this is the opening inventory. Okay, then we have the receivable balance, the current asset, the payable balance of 300, the current liability, cash at bank, again the current asset of 39,500. Then we have the general reserves, and then we have the retained earnings of 9,000. Again, it is 1st January, so these are the opening balances. So any balance on 1st January represents the opening balances. So now we have successfully read the trial balance. Okay, now we need to see the additional information we have, which is in the form of the notes. So we have the closing balance of the inventory. Now we can calculate the cost of sales. Then we have the transfer to the general reserves. So when we say the transfer to the general reserves, So it is a transfer from the retained earning to the general reserves. Then we have the tax thing, corporation tax, which is the estimated tax of K100,000. Then the dividend declared of 0.15 per share. Now that is why we needed the number of shares, because obviously we need to calculate the dividend for the statement of changes in equity and for obviously the payable balance, because it is the declared dividend. So it is a liability as well. The bonus issue of 1 for every 10 shares held issued by the company. Now we have done the capital structure and finance cost chapter. We know that how to calculate the bonus issue. So we know that in order to have the bonus issue, we need the number of shares. We've already calculated it. So now we can do the bonus issue thing. It's quite easy. So bonus issue is 1,20,000 is the number of shares, and they say 1 share for every 10 shares. So that means that the bonus issue shares would be 12,000. Now, the thing is that once we have calculated these 12,000 thing, we need to multiply it by the par value. So it is 1,20,000 into 1 by 10. So we get 12,000. These are the number of shares. And then we multiply 12,000 with the par value. Okay, so the par value is 0.5. So yes, we can do that. So we obviously get the 6,000. So 12, just showing you, so 12,000 into 0.5. So we get the 6,000. Now this is the balance. K6,000 is the balance. So we know that the issuance of the bonus thing is done from the share premium balance. But the share premium balance is not enough for the issuance of the bonus issue. In that case, we take the remaining balance to the retained earnings. So that means we deduct 2,400 from the share premium account, and the rest is being done from the retained earning balance. So the double entry is simply we just writing it. We are not supposed to write that thing in the exam. So we debit the share premium balance by 2,400 because we only have the 2,400 balance within it. We debit the retained earnings with the remainder figure, which is 3,600 because we have 6,000 balance, and credit goes to the share capital account of 6,000. Okay, then we have the depreciation. For motor van, it is to be 20% on cost. So that means 40,000 into 20%. That simply means 8,000 probably, yeah. So 40,000 into 20% gives you the 8,000 figure. This is the depreciation that is to be charged. And the machinery is 5% reducing balance method. So machinery is how much? No, like the motor vehicle, just a minute. So motor van at 20%, yes. Just a minute. So motor van is 30,000. 30,000 into 20% gives you 6,000. And then machinery is reducing balance method. So machinery's cost is 40,000 minus accumulated depreciation of 3,900, and then we multiply it by how much percentage it is. It is 5%. So this is what we can do. So 40,000 minus 3,900, so it's into 5% gives you 1,805. So this is how we do it. Okay, so it is again machinery is to be done on the reducing balance method, the motor vehicle to be done on the straight line method. So the cost means the straight line method. Okay, so we have successfully discussed all the workings. Now what we can do is we can go to the Excel sheet just to make sure we don't have to use the calculator. But obviously you know that how to do that in the exam. So let's make the statement of the profit or loss first, which is the first requirement. So the statement of the profit or loss, I'm not going to write the complete thing over here. So just writing the small union wording so you can understand that. So we are doing the adjustment in the K000. So the first thing we need is the sales revenue, and obviously you have to see the trial balance for that. So for the sales revenue, we have 38,100. So what we just put this figure over here. Then we need the cost of sales. So I'm not writing full cost of sales or cost of goods sold, but don't write CUS in the exam. You have to write the full thing over there, cost of goods sold or cost of sales. So we can calculate that from the working, but in case in the exam you're doing that, so you have to give the reference. For example, you just write working number 1. So again, you do the working number 1 over here, and that is to calculate the cost of sales. So we need the opening inventory. Again, I'm not writing the full term over here, but in the exam you have to write the full term. So we'll be doing the working in the K000. Opening inventory going to the trial balance, how much it is, where it was, yeah, this one. Also opening inventory, let's see the correct figure. The opening inventory is 1300, right? So we put 1300 over here. Then we have the purchases. Again, I'm not writing the full thing. So purchases, the 10,500. And then we have the carriage inwards. So the carriage inward was how much? It is 500. And then obviously we need to charge the depreciation to the cost of sales. It was mentioned over here. The machinery is being depreciated at 5% reducing balance method. And this cost is to be treated as part of the cost of sales, right? So machinery, as we know that, is this 40,000. Yeah, this one. So this is the cost of the machinery is 40,000. Machinery is 5% reducing balance method, and the accumulated depreciation is 3,900. So we can simply calculate it. So depreciation is being allocated to the cost of sales. So we have the cost of machinery is 40,000 minus the accumulated depreciation of 3,900. And obviously we need to multiply it by 5%. So that simply we get the depreciation, which is 1805, right? We already calculated it. Just I showed you how to calculate it. Okay, then we have the closing inventory. Okay, the closing inventory was given in the notes, which is K400. So we just put that thing over here in the negative because the closing inventory is deducted. And now we get the cost of sales balance, which is 13,705. So this is the 13,705, which you take into the statement of the profit and loss. So which is over here. So equal to, and then minus, we put it over here. So we get cost of sales. Now, sales revenue minus cost of sales, we get gross profit. So simply we have the gross profit over here as 24,395. Right? Okay. Then we are going further as per IS1. So we have administration cost. I'm not writing full over here. So administration cost is deducted. How much we have? So we put the minus sign over here because it is deducted. Going to the trial balance, the administration cost, administrative expenses, how much it is. So we have to see administrative expenses is 2,000. Now we have this 2,000. Okay, right? So we have this 2,000 plus. Then we had the depreciation for the motor van, and it is not specified that where to charge this depreciation. So we are taking this to administrative cost, because if it is mentioned that take it to the cost of sales only, it was mentioned with the machinery, that take the machinery depreciation to the cost of sales. So this depreciation of motor van goes to the administrative expenses. Now, the motor van is depreciated at cost. On 20%, the cost is 30,000. What we can do is 30,000 multiplied by 20%. So this is the 8,000. How it is calculated? 2,000 is in the trial balance, and then 30,000, 20%, which is 6,000. We get total administrative cost of 8,000. Now we have the distribution cost. So distribution cost is directly given and we have no adjustment pertaining to that, and we can take directly that figure, so which is 3,200. So minus 3,200. So make sure you're looking at the correct figures within the statement of the profit or loss. Okay, so distribution cost, it is being done, and then we have the interest, which is the finance cost. So actually it is the interest paid. Usually we don't take the interest paid into the statement of the profit or loss. We take the interest payable, right? The finance cost. But the thing is that we don't have, the liability within the statement of within the trial balance. There is no liability. So that means the liability is paid. And this was the only interest we had. Like, for example, if we have the interest thing within the notes, then we don't take the interest paid because maybe it is not the exact amount of the expense. We take the finance cost into the statement of the profit or loss, which is the interest cost rather than interest paid. But here we don't have any liability, so that means this is the only interest that we have, which is minus 2,000. Yeah, 2,000. So then we get profit before tax. So we need to do the calculation from the gross profit to here. So we get this thing, and then we have the tax thing. So tax thing was given. Yeah, this one, the corporation tax is K100. So we deduct 100 from it, and then we get profit for the year, which we take into the statement of the changes in equity. So this is the profit for the year, which is 11,095. All right, now we can make the statement of the changes in equity. So the statement of changes in equity, we need, the share capital balance. Let's write the heads first. We have the share premium. We have the general reserves within the question. And maybe in some question, you have the revaluation surplus. You take that as well. So we have the general reserves, and then we have the retained earnings. Then we have the retained earnings. Okay, so once we have put this, now we need the balance brought forward, right? So balance brought forward. So we put the share capital thing. How much is the opening balance? We need to write the balance, not the shares over here. So balance is 60,000. The share premium is 2,400. And don't forget to mention again that we are doing this working in K000, right? Just like we mentioned within the statement of profit or loss. The general reserves is 600. And the retained earnings is 9,000. Right. So, yeah. Now, first of all, we take profit for the year. So we add that to retained earnings. So this is profit for the year. Then we have the transfer thing. So transfer was how much it is. Transfer, it says 30,000 to general reserves. So minus 30 from the retained earnings, and it is being added to the general reserves. Then we have the dividends paid. Dividends declared, in fact, not paid. So we include that in the liability as well. Now the dividends are paid from the retained earnings, right? Now the dividends is actually K 0.5 per share. So remember, at the start of the year, we had the number of shares to be 1,20,000, but then we issued the bonus issue, and that makes 12,000 further shares. So what you can do is simply calculate this thing. The opening balance of the share was 1,20,000 plus 12,000 shares were further issued. Now this is the total number of shares. Now you multiply it by the dividend, which says 0.15 per share. So 0.15. So you get 19,800. So remember, you need to put the minus sign because this 19,800 is deducted. Not for the exam, obviously, just for the calculation purpose. So 19,800, you need to deduct it, right? So you just put that thing into the bracket or write the negative sign. Okay, so now we have the bonus issue. Now the bonus issue, we have already calculated it. It was, 6,000 added into the share capital and then 2,400 being deducted from here and then 3,600 being deducted from here. So once we have put all the figures, now we get the balance carried forward, which means the closing balances. All right, so this is 66,000, and this is 0, this is 630, and this is minus 3,335. Right, now we can do the working for the property, plant, and equipment. So in the PPE, what we have, so we had, two things within the PPE. We have the machinery, right? And then we have the other thing, which is the motor vehicles, right? And then we do that again, this working in K000, and here we had the total of it, right? So the first thing first, we need the cost of both. So the cost of the machinery is 40,000 and the motor vehicles are for 30,000. Okay, so then we get the accumulated depreciation of it. It is for machinery 3,900, and then just a minute, and then we have the accumulated depreciation for the motor vehicles is 9,000. So this is what we get the carrying amount. Obviously, I'm not writing full, but you have to write full in the exam. So this is 36,100, and this one is 21,000. Now we have the depreciation for the year. We have already calculated it. For machinery, they said, reducing balance method 5%. So what we can do is simply we can do that. 36,100 into 0.05, which is 5%. So this is 1805. We can put the negative sign over here. So just to make sure we are deducting the depreciation. And then we have this thing minus. So the cost into 20%, which is 6,000. Now we get the carrying amount at the year end. So what is this? This one is 3,495. This one is 15,000. And then obviously we get the total of it. So the total of it is 49,000, and this is 49,295. So we can put this figure directly into the statement of the financial position when we are making the PPE. So now we are done with the adjustments. Now you can put the figures over here. So you start, for example, preparing, the statement of the financial position. Just show you how it is being done. So the statement, I'm not doing it on the Excel again, just to make sure I'm just giving you a sketch of that. So the statement of the financial position. So we start with the assets. Within the assets, we have, first of all, the non-current assets. So within the non-current assets, we write, first of all, the PPE, and then we write the balance over there. So we have already calculated it. Okay, then we go through the current assets. In the current assets, we have the receivable balance. Okay, we have the inventory, and we have the bank. So we write the inventory first and the receivable and then the bank. Okay, and then we get the total assets, and then the equity section. Equity section is this one, directly goes to the statement of financial position. All these figures directly goes to the statement of financial position. In the liability, then we have the bank loan, which was being given at 10,000, and then the current liability, which is 3 liabilities. So we have the payables, we have the tax figure, which is K100, to tax payable, and then we have the dividend payable. So then you simply calculate it, and your assets should be equal to the capital and the liabilities. So this is how you prepare the statement of the profit or loss, statement of changes in equity, and the statement of the financial position.